Hey there, it's Mark Yegge. Welcome back to the Covered Call channel that I have here. So glad you're here. Listen, we're in a red market, but it looks like it's trying to go yellow probably tomorrow morning. And so that's telling us we can still have to exercise a little caution, but we can start taking a little bit of chances, start taking our cash out and starting to put a little bit to work. I found this cool trade on NVIDIA. It's a 9-day trade. It's a spread or a synthetic. And so we're going to use a little synthetic trade to generate some cash. So here's how we're going to do it. We're going to go out there, and NVIDIA is right now at about 464, something like that. 463. It's moving all around the place, so it's hard to give you a full exact quote, but it's somewhere between 463, 464 and a half or so. Anyway, we're going to look at the December calls, and we're going to go deep enough to get about 90 delta. So those are the 365s, and the stock's at about 100 points higher than that. So you're going to be paying about $8.40 in juice. That's paying, that's a cost. And you'll probably end up spending for the synthetic a 109.20. So that's $10,920 for one contract. We're going to do 10 contracts. All right, then we're going to go out there and turn around and sell the four, I don't know, let's look at the 450s, I think. Let's do the 450s because that's about an ATR deep. And I think it's a good spot for it. It's about 15 bucks deep or so, 14. And so the 450s right now, you're selling for about 19.10. So we can pick up 19.10. That's a lot of cushion for us because 530 of it is juice. And that 530 is really the income that we're going for. So as long as the stock stays above 450, we're going to make that whole 530 in juice. Let's take a look at the calculations and see how those shake out. So we're going to end up buying the synthetic at 109.20. And we're going to short the call at 19.10. Using a strike price of 450, we're going to do 10 contracts or 1,000 shares if you want to look at it that way. And it's a 9-day trade. So our break even goes from 109.20 all the way down to 90.10. So we really take a lot of risk off the table by doing this. And so we're going to pick up about, I don't know, 562 in juice, giving us 5,620 bucks. The ROI is about 6% for the period. It's pretty good for a short little trade like this. And if you can do that over and over again throughout the year to be able to compare apples to apples, it's a 253% return. So you're risking $90,100 to make $5,620. And if it doesn't work out the way we think it does, if it doesn't close above 450, then we have to make some trade adjustments. By the way, it's a synthetic. A synthetic means it's a leverage vehicle. And synthetics are great, and I use them all the time. But they do cut both ways because they are leverage vehicles. So if you're not right, you calculate the market wrong and it goes the wrong way, you have to know how to adjust it. You have to know mindset because mindset is 90% of what we do. But you also have to know how to adjust it. We teach all that stuff in the Cash Flow Machine if you're interested in that. And if you are, go to cashflowmachine.io/CC info, covered call info, CC info. And you can learn more about that. But if you're going to do a synthetic trade, you got to know what you're doing. You can't just do it because you see it on the internet. Be careful. This is just education, information, entertainment, whatever you want to look at it. But it's an idea. It's something for you to learn and grow with, okay? So listen, I hope that was helpful. If we have a trade that stays above 450 by next week, and NVIDIA is one of those cool stocks that does a lot of good things, and it's coming off a big bottoming process where it went all the way down to almost $400 at the bottom. Now it's at 463. So looks like to me it's going to bounce. And even if it doesn't, we're making that $5.30 or $5.60 in juice, and that's the goal. All right, see you on the next one. Thanks for being here. Bye.